If artificial intelligence is the new gold rush, then NVIDIA is selling the most powerful shovels on Earth. But here's the real question. Professional investors are asking, is NVIDIA still in a structural supercycle, or is it now hostage to the Federal Reserve and bond yields? Today, we break this down through a true hedge fund lens, combining AI demand, capital expenditure cycles, and macro interest rate dynamics. We are witnessing the largest infrastructure build-out since the birth of the Internet. Technology giants like Microsoft, Amazon, Meta Platforms, Alphabet are deploying tens of billions of dollars into AI data centers. This is not incremental spending. This is an arms race. And at the center of that arms race is one company, NVIDIA. Its GPUs are the backbone of AI model training and inference. Its CUDA ecosystem creates switching costs that are extremely difficult to replicate. This is no longer just a chip company. It is an AI infrastructure platform. Let's examine the numbers the way institutional capital does. Gross margins above 70%, explosive free cash flow generation, strong balance sheet, expanding backlog visibility. More importantly, NVIDIA has pricing power. When demand exceeds supply in a strategic technology cycle, margins expand. But what truly differentiates NVIDIA is ecosystem lock-in. Developers build on CUDA. Enterprises optimize around NVIDIA architecture. Switching becomes costly, both technically and economically. That is structural advantage. Now here is where macro matters. High-growth equities like NVIDIA are extremely sensitive to real yields. Why? Because valuation is based on discounted future cash flows. When bond yields fall, discount rates decline, and valuation multiples expand. But when 10-year Treasury yields rise, future earnings are discounted more aggressively. That compresses multiples. So even if NVIDIA's earnings remain strong, its stock price can experience volatility driven purely by rate dynamics. In other words, NVIDIA may dominate AI, but the Federal Reserve controls the gravitational field of the market. No hedge fund analysis is complete without risk assessment. Hyperscalers developing in-house chips, export restrictions to China, AI capex slowdown, competition from advanced micro devices. Additionally, if the AI build-out becomes oversupplied, pricing power could normalize. Cycles matter, even in structural trends. From a long-term perspective, NVIDIA remains a structural winner in the AI infrastructure cycle. But in the short to medium term, this is a macro-sensitive asset. Professional strategy would look like this. Accumulate during yield-driven pullbacks. Avoid chasing parabolic momentum. Monitor the bond market as closely as earnings, because in this cycle, AI drives revenue, but rates drive valuation, and the smartest capital in the world watches both.